Is the credit downgrade just a cover up for sell-off? So for today, macro markets, 19 May 2025, we have a slightly higher uptick. So last week, profits was at 63%, right now it's back at 85%. But of course, after market hour, there is some news about this market credit downgrade. So it gives market some sort of like a reason for it to come down. But looking at historical data, even if the market credit gotten downgrade, right, generally, the stock market still goes up over a long run. So if you are one of the person who is still kind of feel that you're gotten left behind in the market, then maybe this might be a pretty good season to add some shares while we still can. Anyway, my voice today is really down, so I'm going to keep this as quickly as possible. My personal take is that over long run, the rally should sustain, because at this point of time, if we will look at these higher moving averages, it's still trending upwards, so which implies that there is still momentum within the market as well. And right now we're just trading at a slightly over valuation, but it's slightly higher, but it's not the max towards the end as well. And if any, maybe this credit downgrade is actually a gift for us to add shares at a lower price. So tentatively, these are the top 3 sectors that haven't been doing very well in 2025. So semicon is the first one, which is the one that I invest in, and then eventually there's 2 more sectors. In fact, healthcare is actually minus. This one is also minus. Typo. For investors, actually now is when there's ever a retracement, then it could actually be a good time for us to add shares. For stock investors, if you want, you can look at identify some oversold sector, and then eventually find out the high quality businesses, identify some micro support zone, and add shares. So my personal plan will still be the same, since a lot of my shares gonna call away at strike 13. I've already sold strike 13 CSP for my cash secure put for my ETF, and so should it really retrace to about strike 13, I may actually sell, or if not roll options all the way to about 1.5 years later, and then eventually I will be able to pocket about 18K. And so depending on what happens eventually, if the price stays low, below $13, I'm going to use the 18K to run the evergreen wheel strategy. If it will stays above, then that's when I will use the 80K, my full portfolio, to be able to run the evergreen wheel strategy. So in a certain sense, I'm trying to take this opportunity to bring up my portfolio value as much as possible before the market starts to recover, if any. Okay, and lastly, I've also started to implement a moonshot strategy. So recently I tested buying some of it. It's just 2 shares for about $50 in value. Right now it's trading at plus 60% already. So what I'm looking for in these, right, is actually multi-bagger, like 1,000%, 10,000%. It's actually doable, but we need to wait for a lot of market conditions to happen. So I'm going to test this first, and if it works, then probably in the future I'll share more about it. If not, continue to read through the rest of the report. I'll see you again tomorrow. Bye.